Are you getting a tax refund this year? Or maybe you got yours already. Well, what are you going to do with that newfound cash? While booking an exotic vacation sounds enticing, for some, that's not really the best idea. Financial advisor Rob Wilson of Wilson Insight has some suggestions on the smart move for your money. Thank you for being here, Rob.
Hey, thanks for having me, David.
And the refund this year may surprise a lot of people, right?
Yeah, so because of the tax bill, things have definitely changed. The standard deduction went up, but a lot of the things that we used to be able to write off went away. And so it might have been a little bit of a shock this year if you didn't do some proactive planning before the year was out.
And one of the things you can plan for is deciding whether you want to get a refund at all, right?
Yeah, this is a big deal. So you need to figure out, do I really need to be getting this tax refund every year, or would I be better off having the money in my pocket during the entire year? Now, I would tend to say you would be better off having the money in your pocket because you could spend it, you could save it, you could invest it, you could do a lot of different things. So if you get a tax refund, what that means is you paid too much in taxes throughout the year. You're essentially giving the federal government an interest-free loan with your money. So I don't know if you want to be the bank that lends money to the federal government, or you could do something more productive with that. So I think you should decide whether you want to get a refund, and if you don't, then start adjusting your withholding at work so that you can get closer to a point where you don't owe anything, but you also don't get a refund.
Yeah, I was saying before that I like just getting the refund check, but that's not really a reason to give the government a loan all that time.
It's not, but you know what? I will say this. So again, mathematically, probably not the best thing in the world to get the refund, but if it's the only way to force yourself to save, and if you're going to do something smart with it, then there are worse things that you could do with your money.
All right, and let's talk about what you can do with the refund. And one of them, if you're going to do something smart, is pay down debt, right?
Yeah, this is the number one thing that I think you should tackle when you get that big lump sum of tax refund, okay? People are really struggling and drowning in debt, whether it's credit card, whether it's your mortgage, car payment, and these student loans that a lot of us are carrying on our backs. And so use this opportunity to help get that monkey off your back by paying down that debt in a significant way. And so that's really the first thing that I would tackle if I got that big chunk of change when I filed my taxes.
Yeah, and something that we should all be thinking about, and many of us don't do this, is having money set aside in case something happens. If you lose your job or there's an unexpected expense that comes up, and this is sort of the opportunity to do that, right?
Yeah, we know that things happen, right? But it's unbelievable how much we don't plan for it. Look, things are going to happen. Your tire is going to go flat. The furnace is going to go out on the coldest day of the year. This actually happened to me before.
Don't say that, Rob.
It actually happened to me before. And the TV is going to stop working on the day of the Super Bowl. I mean, things are just going to happen, okay? You have to plan for this. So if you're taking care of your debt, if your debt's not out of control, then please set aside some of that money for an emergency fund so that you don't have to go to credit cards, you don't have to go to things like payday loans, really high interest loans in order to handle these types of expenses. Now, a good sort of rule of thumb is 3 to 6 months of your monthly expenses to have socked away. But no matter what it is, you have to start somewhere. So use what you can and start saving for an emergency.
So 3 to 6 months of what your salary would be is a good rule of thumb.
Well, I would say what your monthly expenses are. So if your rent, your car payment, those sort of things, so that you know, to your point, if something happens with your job, you know you can at least handle those monthly expenses while you're trying to find something better.
Yeah. Something else that you say is put it into retirement, right? I mean, it's always a good idea to build up your retirement, right?
Yeah, absolutely. So another thing is that we see that Americans are really woefully underprepared for retirement. So the average retirement account for someone who's, I think, 55 to 61 is about $163,000, which, while it's not as much as I'd like it to be, sounds like a pretty good chunk of change. But that's because the average gets skewed higher by the people who are the real super savers. Okay. When you think about the median amount, which means half of the people are below it, half of people are above, the median account the median number in retirement accounts is $17,000.
$17,000.
$17,000.
That's frightening.
That's just not something that's through a 20 or 30 year retirement. And so again, if your debt's okay, you have your emergency fund socked away, I would really take this time to put something into your retirement account. And trust me, your future self, who doesn't have to work for the rest of their life, will absolutely thank you if you do this.
Yeah, that's great advice. And then your last tip is take a vacation. Are we really hearing this from you, Rob?
You know what? I actually said it. And I know the folks out there aren't used to hearing me say things like that, and maybe even with their own financial advisor. But you know what? Half of Americans do not even take their paid time off because half of Americans,
Holy cow.
and they're getting paid for these days, right? So people feel like, look, I'm afraid to leave because what if something happens and I lose my job, or I don't think other people can do my job. A number of reasons why people don't take their days. But look, burnout is a real thing. If you're just axed to the grindstone every single day, burnout is real. You're not going to be as productive, and you probably won't see those promotions and things that are going to help you make more money over in the long run. So I would say if those other issues are taken care of, your debt, your emergency fund, your retirement, go ahead and have some fun. Take a vacation, because you know what? If you work so hard and you can't enjoy it, what are you really doing it for?
Well said. Yeah, and you need to take care of yourself, even mentally, just being able to keep going to work every day.
Oh, no question. Look, in addition to just your physical health, you got to clear your head sometimes so that you can remain sane amongst all of your crazy coworkers, who get on your nerves. You need a little bit of time from those folks sometimes, I think.
All right. Well, great advice, Rob. We appreciate it very much. Rob Wilson of Wilson Insight. Thank you.